Today, in this video, we will hear the story of how a trader lost $100,000 in trading. He lost $100,000 in trading, and this is what no one told him. It didn't happen overnight. It wasn't a single trade. It wasn't one isolated mistake. It was a series of small, almost invisible decisions that slowly built up into a nightmare he never thought he would experience. He remembers perfectly the day he opened his first trading account. He had excitement. He had hunger to change his life. And above all, he had a dangerous confidence. He believed he understood the market far more than he actually did. He had watched videos, read a few books, tested strategies on a demo account. Everything seemed simple. Lines, patterns, candles, everything made sense. On simulation, he was winning. In his mind, it was only a matter of time before he started making real money. But no one told him something important. Trading is not hard because of the analysis. It's hard because of what happens inside you when real money is on the line. He deposited his first $1,000. For many, that's not much. For him, at that moment, it was everything. It was a mix of savings, sacrifice, and hope. That account didn't represent money. It represented an opportunity. The first week was incredible. He won. He won several trades in a row. He felt like he had found the formula. He thought, this is easier than they say. That was his first mistake. When the market rewards you at the beginning, it deceives you. It makes you believe you're good, when in reality you're just lucky. But since no one tells you that, you interpret it as skill. He increased his position sizes. He stopped following his plan. He started improvising. After all, it was working. And then the first big loss came. He felt his chest tighten. His mind searched for a quick explanation to avoid accepting what was happening. But instead of stopping, he did the opposite. He opened another trade. It can't keep going down, he told himself. It went down. He opened another one. Now it has to go up. It didn't. That day, he didn't just lose money. He lost control. But the most dangerous part was that he still didn't understand what was happening. He thought it was bad luck. He thought the market was against him. He thought he just needed to make it back. And that's where the cycle began. Months passed. His account went up, down, but slowly the overall balance was negative. Every time he won, he felt anxious. Every time he lost, he felt angry. But he kept going, because there was something no one told him. Trading can become addictive. Not because of the money, but because of the emotion. Every trade is a dose of adrenaline. Every entry is an emotional bet disguised as technical analysis. And if you're not aware of that, the market traps you. He decided to get serious. He deposited more money. $5,000. He told himself that now he would be disciplined, that now he would follow a system, that now he would act like a professional. It lasted 2 weeks. Discipline is easy when there's no pressure, but when the market starts moving against you, everything changes. He started justifying. He started moving his stop loss. He started risking more than he should. He started breaking his own rules. Little by little. Not all at once. That's the problem. If he broke all the rules at once, it would be obvious. But no, it happened slowly. And when he realized, it was too late. There was one trade he never forgot, in gold. Everything indicated it would go up. He had confluence. He had structure. He had liquidity. Everything he had learned was there. He entered heavy. The price started falling. He thought, it's a pullback. It fell more. He thought, it's manipulation. It fell more. He thought, now it will turn. It didn't. Instead of closing, he added more positions. That's called averaging down. And although many disguise it as a strategy, in most cases, it's simply denial. That day, he lost more than he had made in weeks. But the worst part wasn't the loss. The worst part was that even after that, he kept trading. That's where the real destruction began. Because when you trade from emotion, you're no longer seeing the market. You're trying to recover something you lost. And the market doesn't work that way. The market doesn't know who you are. It doesn't know how much you lost. It doesn't care. And no one told him that clearly. He kept consuming content. He kept learning new strategies. Every time something failed, he thought the problem was the strategy, not him. He jumped from system to system. price action, indicators, smart money, scalping, swing, always searching for the key. But the truth was different. The strategy was never the main problem. The real problem was his lack of emotional control, the absence of real risk management, and his misunderstanding of how liquidity works in the market. But that's not what gets sold. What gets sold is make money fast, secret strategy, perfect setup. No one talks about losing. No one talks about negative months. No one talks about how hard it is to stay disciplined after multiple losses in a row. A year passed. If he added everything up, he had lost around $25,000. That number hurt, but not enough to stop him, because he still believed he could recover it. And that belief is one of the most dangerous things in trading, because it keeps you in the game, but playing it the wrong way. He decided to level up. More capital, more risk, more pressure. That's when everything accelerated. He started trading more frequently. He no longer waited for clear setups. He didn't respect timing. He traded out of boredom, anxiety, impulse. Trading stopped being a process and became a reaction. Every loss hurt more. Every win felt like less. He became obsessed with the charts. He checked the market all the time, even when he wasn't trading, even when he knew he shouldn't. His mind never rested. And that exhaustion doesn't show in the balance, but it destroys you just the same. He reached a point where he didn't trust anything anymore. Not his analysis, not his decisions. He would enter trades and exit too early. Or worse, he would let losses run and cut profits quickly. Exactly the opposite of what he should have done. But at that moment, he couldn't see it. He only felt trapped. Like the more he tried to improve, the worse things got. And still, he didn't stop, because he had invested too much time, too much money, too much effort. And when you invest that much, quitting feels impossible. More months passed. His total loss was now close to $60,000. That's when he started questioning everything. What if this isn't for him? What if everything he's done is wrong? What if he will never be profitable? Those questions are dangerous, because they can make you quit or push you into making reckless decisions. In his case, it did the second. He decided to make one last attempt, an aggressive one, without fear, or so he thought. He deposited a large amount and told himself, this is it, all or nothing. That kind of mindset is as far as you can be from being a professional trader. But at that moment, he didn't understand it. The first trades went well. He recovered some money. He felt hope again. And right there, the market did what it always does. It showed him reality. A losing streak, then another, then another. And instead of stopping, he increased his risk, because he was no longer trading with logic, he was trading with desperation. Within weeks, everything collapsed. He lost almost all that capital. And with that, he reached the number he never thought he would say. $100,000 lost in trading. Saying it now sounds cold, but living it is something else. It's not just the money, it's the time, it's the energy, it's the confidence, it's the version of himself he thought he would become. All of that breaks. He remembers the day he closed the platform. There was no anger, no frustration, just silence, an uncomfortable silence, like when you finally accept something you didn't want to see. And that's when, for the first time, he stopped blaming everything outside. It wasn't the market, it wasn't manipulation, it wasn't other participants, it was him. But not in a way of guilt, in a way of responsibility. And that changed everything, because when he understood that the problem was him, he also understood that the solution was within him. But no one tells you that at the beginning. No one tells you that trading is more psychological than technical. No one tells you that you can have the best strategy in the world and still lose money. No one tells you that risk is the only thing you truly control. No one tells you that losing is part of the game, but only if you know how to lose properly. Because losing badly destroys you, but losing well teaches you. After that collapse, he stopped trading for a while. Not days, not weeks, months. And that was one of the most important steps, because it allowed him to see everything clearly, without pressure, without emotions, without the need to make it back. He started studying for real. Not strategies, but behavior, psychology, Risk management, liquidity. He understood things he couldn't see before, like how the market moves in search of liquidity, like how what looks like a signal is often a trap, like how you don't need to trade every day, like how fewer trades can mean more money. But most importantly, he understood one key thing. The goal is not to make money. The goal is not to lose it, because if you protect your capital, opportunities come. But if you lose it, there is no second chance. When he returned to trading, everything was different. Not in the charts, in him. He traded less, he risked less, he waited more, he accepted small losses without hesitation, and that changed everything. He didn't become a millionaire, he didn't recover everything immediately, but something shifted. He stopped losing, and in trading, that is the first real step to profitability. Today, when he looks back, he understands that those $100,000 were not just losses. They were the price of an education no one explained properly. But if he could go back, there are things he would tell himself from the beginning. And this is what no one told him. That trading is not a fast way to make money. That consistency matters more than a big win. That risk should feel boring. That if you feel excitement while trading, you're doing something wrong. That the market owes you nothing. That losing is not the problem. The problem is how you react to it. That discipline is not built when things go well, but when everything goes wrong. That you don't need more information, you need better execution. That most people lose, not because they lack knowledge, but because they lack control. And that, in the end, trading is a mirror. It shows who someone really is. Their fears, their impulsiveness, their ego. And if they don't work on that, the market will use it against them. If someone is starting, or if they've been in this for a while and feel stuck, this story is a warning. They don't need to lose $100,000 to understand it. If they learn this early, they can save years of mistakes, and maybe completely change their outcome in trading. If you want more trading content like this, subscribe to the channel.